The 4 financial statements of summarized accounting data. The first statement we will look at is the statement of comprehensive income. This looks at profit and the addition of comprehensive income, which would equal total comprehensive income. This statement can come in 2 forms, either as a single statement, or it can come as an income statement with the addition of statement of comprehensive income. The statement of comprehensive income reports the income and expenses for a specific time and period. This time and period tends to be specified in the third line of the title, such as for the month ended on September 30th, 2011. Next you have the statement of equity. This is where your profit gets added to. Note that retained earnings only gets profit and not comprehensive income. Retained earnings is also where dividends become subtracted out of. The statement of retained earnings. The standards require a statement of change in equity, not a retained earnings statement. The statement of changes in equity is more comprehensive, reconciling the beginning to ending balances of each share capital and reserve account. Now we have the statement of cash flows. For each month ended, you have to summarize the increases and decreases in cash. For example, you may have a statement of cash flows that looks as follows. Cash flows from operating activities, cash receipts from revenues, cash payments for expenses, cash flows from investing activities, sales and purchases of non-current assets, cash flows from financing activities, share issuance, such as sale of common stock, share buybacks and buyback of non-current debt. As a general rule, comparative information from the previous period is required for relevance. As a general rule, presentation and classification of items in the statement should be consistent from one period to the next, which is the concept of consistency. There should be notes to the financial statements, such as to contain a statement of compliance of IFRSs, assuming that the company has to follow IFRSs. Summarize significant accounting policies including measurement basis, and judgment made in applying the policies, while providing supporting information for items presented in the financial statements. For measurement basis, you can use historical, present value, or fair value. Judgments made for policy making can involve how the estimates are made and the logic behind it. Supporting information can include how you comply with faithful representation of completedness while reconciling beginning and ending balances. In our next lecture, we will be discussing the recording of debit and credit transactions.